two most important things that I am going to discuss in this S&P 500 technical analysis. The first one is the 61.8% of the Fibonacci retracement level, and the other one is the 4291 resistance level, which is also known as the golden resistance level. Now, because the 61.8% of the Fibonacci retracement level as well as the 4291 are very close to each other, this means that somewhere around here S&P 500 is going to find an extremely heavy resistance, and as of now this will be considered as the peak of the S&P 500. Also, in the absence of any good or any bad news in the coming week, the S&P 500 can give a tricky movement, and it's not just the S&P 500 but also the Dow Jones as well as the Nasdaq. Guys, last week in very detail I have discussed this, the US debt default, that there were three scenarios and the outcome of these the three scenarios. The first scenario was if the US defaults. In that case, a very heavy fall, a catastrophic movement in the stock market. Second condition was that if the US doesn't default and if the terms of the negotiation between these the two parties, the Republicans and the Democrats, if the terms are known and if the US doesn't default, in that case the terms will define the movement. And the third case was that if the US doesn't default and if the terms are not known, in that case, yes, a heavy bullish movement or a good bullish movement. But any bullish movement will be restricted to maximum up to 4300 or otherwise the golden resistance level at 4291. And if you see that the high of this candle was 4291. Now guys, I am going to discuss the agenda of this S&P 500 technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart. So weekly chart means the big picture. I will analyze the S&P 500 on the weekly chart and will tell you that what we are expecting through the weekly chart in the near term. Near term means like for a month or for a quarter, what we are expecting in the or through this the weekly chart. The second point of the agenda of this S&P 500 technical analysis is the S&P 500 support and resistance levels. For example, last week I mentioned these things that 4155, as long as S&P 500 remains above 4155, doesn't matter whether it is red, green or whatever, but as long as it remains above 4155, it will have chances or good chances to hold and to give a bullish reversal. And if you notice that the previous week it came down but it remained above 4155, and that in the bull side we are expecting at first 4227. However, if the third scenario of this, the US debt default that we have discussed, if that is fulfilled and also the terms of the negotiations are not known, in that case what will happen? In that case only the S&P 500 can breach 4227, move up to a maximum of 4291, the golden level, the golden resistance level, or up to 61.8% Fibonacci retracement level. That's it. That will be the max and nothing beyond that. So I will give you these the support and resistance levels for the coming week. Then comes the third point of the agenda of this S&P 500 technical analysis, and the third point of the agenda, it is very important for the coming week. Not just for the week but for the weeks and for the months. And I will discuss the 61.8% Fibonacci retracement level here on this the daily chart as well as on this the weekly chart, and that will be seen through the monthly and the quarterly candles. Other than that, I will discuss the 4291, that is the golden resistance level. In this case it is the resistance level because as of now the S&P 500 is trading below 4291 for more than a year. That is why it is going to act as the golden resistance level 4291. Then comes the fourth point of the agenda of this S&P 500 technical analysis, and the fourth point of the agenda is the S&P 500 technical analysis on the daily chart. I will analyze the S&P 500 on the daily chart and I will tell you that what is happening or what is expected to happen through the technicals, or what the technicals are saying for at least for a week or for 2 weeks, right? Then finally I will discuss the probable movement of the S&P 500 from June 5th, that is Monday, through June 9th, that will be Friday. So what is going to happen in the S&P 500 on June 5th and until June 9th, that will be the Friday. And guys, one very important thing, that just after this week, okay, once this week is over, this the week from June 5th and June 9th, once this week is over, then on June 13th, I guess, June 13th, the CPI data, the monthly CPI data, the inflation data and the core CPI data, it will be published. Okay, and just one day after the CPI data, probably on June 14th, we have the FOMC scheduled. Okay, the Federal Open Market Committee, the meeting is scheduled for June 15th. However, this event, the CPI, the inflation and the FOMC and the press conference of the Federal Reserve Chairman, it is scheduled for the next week. But its impact will be felt in this week, in the coming week. And that I will discuss in the probable movement of the S&P 500 from June 5th through June 9th. So guys, if you have not yet subscribed to my channel, then please subscribe to my YouTube channel and hit the bell icon. Now guys, I am going to discuss the first point of the agenda of this S&P 500 Technical Analysis. And the first point of the agenda is the S&P 500 Technical Analysis on the weekly chart. So let me write it down. W as in weekly chart. Weekly chart means that the one candle represents 1 week, not 1 hour, 1 day or 1 minute, right? One candle means 1 week. So now let's first decode the candle itself. If you look into the candle, it has a long tail and then a heavy green body. And also the closing of the candle was almost equal to the high of the candle. What it means? This simply means that this candle is giving heavy bullish sentiments, right? And also this candle has the capability or the capacity to give a gap up open on Monday, or irrespective of any open, a bullish movement, initially a bullish movement. I'm not saying that there will be very heavy bullish movement. Bullish movement means even if there comes a gap down open, then also at first it can try to move up, right? That kind of bullish movement. Or even if there comes a flat open, then also it can try to move up a little. Means its upward movement will be limited to, that is what I'm going to discuss, the 4291 and the 61.8% of the Fibonacci retracement level. Okay, but here I'm just talking about this the bullish movement, okay, initially upon open. But how far the movement can go, the bullish movement, that will be defined by 4291 and the 61.8% of the Fibonacci retracement level, right? So this was the candle. Now let's talk about the technical indicators. So at first we have the Bollinger Bands. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed in between the upper band of the Bollinger Band and the median of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands on the weekly chart, right? Now comes the moving averages. A clear fan out in the moving averages. Closing of the candle is above the moving averages. This means that the S&P 500 is clearly bullish through the moving averages on the weekly chart. Then comes the Ichimoku cloud. Because the S&P 500 was able to close and hold above the Ichimoku cloud, and now this was the third consecutive candle, the third successive candle. This means that the S&P 500 is clearly bullish through the Ichimoku cloud. Now let's see what other technical indicators are saying. We have the MACD. MACD is more than the signal. This means that the S&P 500 is bullish through the MACD. Then comes the stochastic RSI. Now this is interesting. The stochastic RSI, it is interesting because the K channel is more than the D channel. This means that the S&P 500 is bullish through the stochastic RSI on the weekly chart. However, the K channel is absolute 100. It has hit the absolute 100 level. Okay, that is the only problem technically on the weekly chart. What it means by this, the 100, a probable reversal or a hold or anything that will be red. Okay, even if it is like 0.01%. But whether there will be an actual reversal or not, that I will discuss in the fifth and the final point of the agenda of this S&P 500 technical analysis in the probable movement, right? And other than that, the divergence and all of the technical indicators are good. Volatility is normal, etc., etc. So now what we have seen is that the S&P 500 is bullish through the Bollinger Bands. S&P 500 is bullish through the Ichimoku cloud on the weekly chart. S&P 500 is bullish through the moving averages on the weekly chart. S&P 500 is bullish through the MACD on the weekly chart. S&P 500 is bullish through the stochastic RSI on the weekly chart. This means that the S&P 500 is absolute 100% absolute bullish on the weekly chart, right? This does not mean that the S&P 500 is going to see a heavy bullish movement in the coming week or the weeks. The problem is that a heavy bullish movement would have considered if it would have closed or was trading around 4220, 4230, etc. Because as of now it has hit the 4291, right? That is the golden resistance level, and then we have the 61.8% Fibonacci retracement level. So all of this, that how this 100, how means how even this the 100% absolute bullish technical movement cannot or might not be seen, might not be considered or might not be seen as a probable or a heavy bullish movement in the coming week or the weeks. Okay, so that is what I am going to discuss in the fifth and the last point of the agenda, the probable movement of the S&P 500. So guys, if you have not yet subscribed to my channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for the daily updates and the daily analysis of the S&P 500 from Monday through Friday, each and everything, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 technical analysis. And the second point of the agenda is the support and resistance levels for the S&P 500 for this the coming week. So as we can see that the S&P 500 has closed at 4282. This means that the immediate resistance it is going to face will be 4291 itself. 4291, that is the golden resistance level. Then we have 4310. 4310 approx 4310 or 4307, etc. Okay, that is the 61.8% of the Fibonacci retracement level. So from 4310 to 4291, this particular zone, this is a very heavy resistance zone, and as of now at first the S&P 500, even with the heavy bullish sentiments, is not allowed to breach this zone, okay, in just one go. But if for any reason if it does, then also it will be back to this the zone or even below the zone itself. Okay, so that I will discuss in the next point of the agenda. Okay, that is dedicated to this the 4310 and 4291. Okay, so as of now 4291 and 4310, these are the resistance levels. Then we have the immediate support level at 4265, immediate support level at 4265. And if you have noticed that the S&P 500 was struggling to breach the 4265 initially, but with a heavy push, a heavy manipulated push, okay, a heavy volume, it was able to clear 4265. And that was the same thing I mentioned in my pre-market update to my community members, that this means if the stock market wants to celebrate, means bullish, then it can do that today. Today means on Friday, just like the European market, which is heavily up, because the European market was more than 1% or 1.5%, okay, on that day itself, based on this news. But from the next week onwards, the stock market will consider or will be forced to consider the Federal Reserve's expected outcome after the better than expected data. Data means the CPI, PPI, and now the non-farm payroll data that was published on Friday, and that was much more than expected. And if for some reason the stock market fails to capture this opportunity, means to celebrate what? Celebrate means going bullish or going heavily bullish. If the stock market fails to capture this bullish or heavily bullish opportunity by neglecting the NFP data, non-farm payroll data, then there is nothing more for the stock market next week and next week onwards. This means that it was only the Friday, only and only the Friday, that the stock market and the market movers they have had. Then we have the 4237 and 4227. This, the 4237 and 4227, this is a very heavy. Earlier this was very heavy resistance zone, and you can clearly see it moved up, failed, it moved up, okay, and then failed. But at this time, okay, in the this particular time, because the S&P 500 has closed above 4227 and 4237, this means that whenever it comes down, it is going to find very good support in this particular zone, that is from 4227 through 4237. Thereafter, the next good support comes at 4207, and if you look into the movement, 4207, 4207, 4207, again and again, okay, another, so this is another, this is the good support. Then we have 4185, another good or very good support, 4185, you can clearly see many times 4185. Finally comes the 4155, as mentioned earlier, okay, last week, that as long as S&P 500 is holding and closing above 4155, it will remain bullish, or it has chances to remain bullish, or it has chances to give a bullish reversal. Means overall it can hold even if there comes red, green, or means whatever type of candles, any technical candle, doesn't matter. As long as it is holding above 4155, it can still hold, it can remain bullish, as simple as that. Then we have 4127, a very good support, very heavy support, 4110, 4091, 4065, and then we have 4035. 4035 is extremely heavy support level, right? So why I am counting this the 4035 and why I am keeping the bullish movement up to 4310? There are three reasons. The very first reason is that this particular zone from 4291, 4310, this is extremely heavy resistance zone, and that I am going to show you in the next point of the agenda, where I will discuss the 61.8% Fibonacci retracement and 4291 and the historical movements. I will show you through the historical movements that why again and again the S&P 500 felt uncomfortable whenever it came around this particular level, the 4291 particularly. Okay, that is the first reason. The second reason is that the S&P 500 is currently trading at overstretched technicals, particularly on the lower level charts, right? And the third point is that the terms of the negotiations, the terms are not yet known. Back in 2010 or 2011, during the Obama administration, the similar kind of situation was seen, but not but this time okay, it was entirely different. But back in 2010 or 2011, the economy was, and the stock market and the economy, it was out of the recession, and that time both of these parties, the Democrats and the Republicans, they agreed to some of these terms. Okay, means the Democrats, they were in the power, and the Republicans compelled them to agree to the terms of the Republicans, and the Obama administration did. And then one agency downgraded the rating of the US from AAA to AA. That was, I guess, AA minus. Okay, that was the rating. But that time this scenario was different, because the economy was out of the recession. Secondly, the inflation was normal, and it was only one agency that has downgraded the US, okay, from AAA to AA minus. This time the picture is different. This time the US economy is going to enter into the recession. Last time what happened? The US economy was out of the recession, but this time it is going to enter into the recession. Secondly, this time again, one or more than one agencies will downgrade the US rating from AAA to AA positive or AA minus. Okay, it will depend. Okay, that what were the terms. And other than that, the upcoming the Federal Reserve FOMC meeting, and this is the economic data. So these are the factors. So considering these factors, I have kept the this upward movement up to 4310. See, a little up down, that is okay, that is normal. Now guys, I have one more important information to share with you, that how you can join my Patreon community. In order to join my Patreon community, you need to follow the link I have given in the description of the video and also in the comment section. When you follow the link, then you will see this the page. This is my Patreon page. And on this page, there are these three tiers. The first one is the daily S&P 500 updates. for non-US Canada residents only. The second one is the daily S&P 500 updates for US Canada residents only. So when you subscribe for the daily S&P 500 updates, okay, either of these two, then you will get the daily S&P 500 updates from Monday through Friday, pre-market update, first, second, third, fourth update, the final update, each and everything from Monday through Friday. The only difference is the geographical location. And the third tier is the stock market opportunities and daily updates. This means that you will get the daily updates of the S&P 500 from Monday through Friday as you were getting in these the tiers, as well as stock market opportunities, the US stock market opportunities in the premium stocks, minimum 5 to 10 every week in the premium stocks. So I give these the minimum 5 to 10 stock market opportunities every week in the premium stocks of the US stock market. And if you notice that many people have joined and have subscribed to these the opportunities, the stock market opportunities, and they are getting these the daily updates from Monday through Friday, each and every day, pre-market update, first, second, third, fourth update, and the final update. So if you want to join my Patreon community, then I have given the link in the description of the video as well as in the comment section. Now guys, I am going to discuss the third point of the agenda of this S&P 500 technical analysis, and this is very important because this is going to define the near future of the S&P 500 and for the entire US stock market. And the third point of the agenda is the 61.8% of the Fibonacci retracement level, which is approximately 34310, and the 4291 is my this is the calculated level. And as you know that all of these the levels that you are seeing, these are not the standard pivot levels. This is what I have calculated myself by analyzing the last many years of data of the S&P 500, right? So what is so important and why this the 4291 is this much important? So in order to understand the importance of the 4291, you need to look into the historical movement of the S&P 500, that how the S&P 500 has reacted to or around 4291. Okay, so it all began back in 2021. Back in 2021, what has happened is that the S&P 500, okay, it was moving up, and then it came in the month of June 2021, okay, 2 years ago, it hit the 4291. Okay, then it was able to, because at that time the stimulus, okay, it was coming in, money was flowing in, okay, and the entire US stock market, it was bullish. Secondly, just before the 4291, there was a little dip, and again buy on dip. So that time the entire US stock market was bullish, heavy bullish sentiments. Okay, and the fuel means the money was there in the form of stimulus. Okay, so it moved up. Now because it was supposed to hold around 4291, whatsoever be the case, in whatsoever be the manner, okay, it was supposed to hold around 4291. It disrespected the 4291. It moved up and then it came down heavily, right? Again it moved up, again it came down heavily, right? So this is what we have seen, this is the importance of the 4291 for the very first time, that no matter what, the 4291 must be respected, even if the S&P 500 for any reason, even, okay, like manipulated, okay, or manipulation or no manipulation, doesn't matter, whatsoever be the reason, even if the S&P 500 breaches the 4291, it will come back again and again in the form of heavy fall back to the 4291, right? That was the first time. Then came this the second time. Now because the S&P 500 was able to hold and sustain above 4291, so this side it was bullish, okay, this side this was bearish. So this was the mark between the bulls and the bears, the 4291. It moved up, okay, and then finally it came down. Then in the month of September 2021, it came down and a very heavy fall, and again it was able to sustain. See, even if it would have hit the 4291, then also there was supposed to be a bullish reversal, because now it was trading bullish. This means that whenever it comes down, 4291 will hold the fall, right? It was there it moved up again, and then again it came down, then again 1 2 3 3 days, okay, heavy fall, this downward movement, fall and again fall. 4291 was able to give a very heavy support to the entire US stock market and to this the S&P 500. Now in the year 2022, in the month of January 2022, we have seen a very heavy fall, and within a single candle it breached this the 4291. Okay, within a day it breached the 4291. It came down heavily, but because it disrespected the 4291 again, we have seen an intraday reversal, intraday heavy reversal. Next day again it came down, again found very good support at 4291, again a reversal, again and again, then again a heavy, there is the support, and then again a heavy reversal. 4291 again and again proved itself as a very heavy support as well as very heavy resistance. Then on 23rd of February 2022, finally the S&P 500 was able to close below 4291. Why it was there? Because that day there was a news, okay, almost a confirmation that the Russia has invaded the Ukraine. So what we have noticed is that the S&P 500 was able to sustain our 4291 in the absence of any heavy news. Okay, even in case of a bad news, it was able to sustain. But in case of this the heavy news, okay, heavy news like this, the Russia has invaded the Ukraine, or the US government has banned on this the import of the Russian oil, only in those cases the S&P 500 came down or came below 4291 and closed below 4291. Okay, again we have seen it struggle at 4291, gave up, okay, and then finally there was this the things normalized and it was able to move up, right? So we have seen that until and unless there comes a very heavy news, very heavy bearish news, the S&P 500 was able to sustain and survive above 4291, right? Now since the month of April 2022, what we have seen that the S&P 500 came down and it tried to sustain above 4291 but failed, again failed, and then since April 2022, okay, it's been more than 14 months, okay, the S&P 500 is trading below 4291, and now after 14 or 15 months the S&P 500 is back around 4291. Now guys, I hope that the concept of 4291 is clear, that beyond this the 4291, if the S&P 500 sustains, okay, beyond this the 4291, then it will be considered as bullish. Below 4291 it is all bearish. Now guys, let's talk about the 4310. Okay, what is this the 4310? 4310 is the 61.8% of the Fibonacci retracement level. So when I say the Fibonacci retracement level, I am considering the high, the all-time high of the S&P 500 and the recent low. The recent low that was there in the month of October 2022. So from this high to this low, okay, the reversal, this is the 61.8% Fibonacci retracement level. So this is the movement that you see, this kind of movement. So this particular level, this is either the 50% level or the 61.8% Fibonacci retracement level, and then again, okay, this is the cycle, it continues, right? Similarly, in case of the bearish movement, okay, this is how it works. So it comes down, then hit the 50% level or the 61.8% level, and then again resumes its bearish cycle, then 50% or 68%, then again resumes. Okay, this is how the stock works, or the stock market works, or an index works. Okay, this kind of movement, right? So that is the 61.8% Fibonacci retracement level when we consider the all-time high of the S&P 500 and the recent low that was there in the month of October 2022. Now the concept says that the S&P 500 is allowed to retrace up to 61.8% level, that is 4310. We have 4291, then comes 4310. So this from 4291 through 4310, this is the 20 points, approximately 20 points. This is a very heavy resistance zone, very heavy resistance zone. A little bit of, this is the breach, a little bit up down like 2 points, 4.5 points, okay, that's not a problem, okay, that can happen. So this is a heavy resistance zone. This means that at first the S&P 500 has to struggle around 4291. If it is able to clear the 4291, then immediately there will be the 4310. That is the 61.8% Fibonacci retracement level. Okay, again it will struggle. So this is the zone where the S&P 500 is expected to or is going to struggle. The S&P 500 has reached to its zenith. Now, as you know that the Federal Reserve itself has confirmed that the recession will be there in the economy, right? So this means that as of now, the S&P 500 has reached to its zenith. Zenith is 4291, 4310. Okay, a little bit up down. Okay, a small. Okay, a little bit up down to 2, 4, 5 or 7 point. That's normal. That's not a problem. Okay, but this is where we are expecting the S&P 500 to hold and to finally to reverse, right? Now, this may not happen immediately. This might take some time, 1, 2, 3, 4, 5 days or 7 days. Okay. Now, when we look into this, the coming week, the next week, then what we know? That there is no news. Okay, means no scheduled news, no planned news, good or bad. Other than that, the economic data. Okay, there is yes, there are economic data. Okay, some of these economic data, but that does not have this much importance. This means that if the S&P 500 want to hold at or around 4291, then it has just 1 week, 5 days. Okay, the next week. Okay, then in the next week, the CPI data will be published, and then immediately after 1 day, this will be the FOMC minutes of the meeting and the press conference of the Federal Reserve Chairman. So now I hope that the picture is clear, and now you understand the 4291, the importance of the 4291 and the 4310, right? So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for the daily updates or daily analysis of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the fourth point of the agenda of this S&P 500 technical analysis. And the fourth point of the agenda is the S&P 500 technical analysis on the daily chart. This is the daily chart. Let me write it down. Daily chart. D as in daily chart. Daily chart means that the one candle represents 1 day, not 1 week or 1 hour. One candle means 1 day, right? Let's first interpret the candle itself. If you look into the candle, the open of the candle was the low of the candle. This means that there were heavy bullish sentiments. Okay. Secondly, the closing of the candle was almost around or almost equal to the high. Okay, not exactly very near, but almost equal to the high. And this was a green candle. Okay, this means that there were the bullish sentiments at the time of closing. Secondly, this is a heavy green candle. Overall, this candle is representing or is giving the bullish indication, the bullish sentiments. Okay, this is the bullish movement. This means that on Monday we can expect, irrespective of any open, we can expect, okay, an upward movement initially. Okay, whether there comes a gap down open, okay, or flat open, or if there comes a flat open, then also that condition is fulfilled. If there comes a gap up open, then also the condition is fulfilled. And if there comes a gap down open, then it can try to move up to what? Move up to towards 4282. That was the previous close. Okay. Then and when that happens, okay, then again the condition is fulfilled, right? Now let's see what the technical indicators are saying on this, the daily chart. First comes the Bollinger Band. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed above the median, above the upper band of the Bollinger Band, this means that the S&P 500 is bullish through the Bollinger Bands. Then comes the moving averages. Clear fan out in the moving averages, and the S&P 500 has closed above the moving averages. This means that the S&P 500 is bullish through the moving averages. Then comes the Ichimoku cloud. Because the S&P 500 has closed above the Ichimoku cloud, this means that the S&P 500 is bullish through the Ichimoku cloud on the daily chart. Now comes the MACD. MACD, for now the MACD is more than the signal. This means that the S&P 500 is bullish through the MACD. MACD is the moving average convergence divergence. Then comes the stochastic RSI. The K channel is more than the D channel. This means that the S&P 500 is bullish through the stochastic RSI on the daily chart, right? and the K channel, D channel, okay, fine, and all other technical indicators are fine. The divergence is increasing, okay, that can be a problem, that can be a problem if there comes one or two more bullish candles, okay, or a small these the candles around this level 4291, okay. So overall what we have seen on the daily chart is that the S&P 500 is bullish through the Bollinger Bands. S&P 500 is bullish through the Ichimoku cloud. S&P 500 is bullish through the moving averages, okay, on the daily chart. S&P 500 is bullish through the MACD on the daily chart. S&P 500 is bullish through the stochastic RSI on the daily chart. This means that the S&P 500 is 100% absolute bullish on the daily chart. But again the same condition 4291 4310, okay, even though it is 100% bullish on the daily chart, even though it is 100% bullish on the weekly chart, but still 4291 4310 are going to play their these roles. So let's discuss that what and how the 4291 and the 4310 is going to make an impact on the S&P 500 in the coming week. Okay, so let's move on to the next point of the agenda. Now guys, I am going to discuss the fifth and the final point of the agenda of this S&P 500 technical analysis, and this the last point of the agenda is the probable movement of the S&P 500 from June 5th, that is Monday, through June 9th, that will be Friday. Let's see what is going to happen in the S&P 500 in the next week from Monday through Friday. So a few things that you must understand and that you must consider. The number one thing is that the US is not going to default on its debt, okay, that is clear. And this was the very first time, okay, in the history of the US that it came so close to the default, okay. So it is not going to default, but the terms of the negotiation, the terms of the negotiation between the Democrats and the Republicans, okay, these are not known. Once the terms are out, once the terms are published, okay, once we come to know, okay, that the Republicans have asked the Democrats to agree to these following, conditions, and the Democrats have agreed to these the conditions, and these conditions are going to impact impact the economy, okay, heavily, or the businesses heavily. In that case, definitely, okay, there will be a bearish impact on the stock market, right? Other than that, these terms will force these the agencies, okay, the credit rating agencies, okay. As of now, the US is enjoying AAA rating, and as soon as the rating is downgraded to anything like AA, okay, positive, negative, or A, okay, positive, negative, doesn't matter. But as soon as the rating is downgraded, and because this time the recession is about to come, okay, as confirmed by the Federal Reserve, okay, the recession is about to come, and secondly, the inflation is very high. This means that this time, okay, unless back in 2010 or 11 when the things were just opposite, okay, recession was over, inflation was down, okay, they were agreed to these the terms, and only one agency downgraded. So that time there was not much impact, okay, on the stock market. But this time everything is just opposite. The recession is about to come, economy is going to enter into the recession. Other than that, the inflation is high, and then this is the credit rating, okay, this is the downgrade, okay, just opposite. This means that this time there will be a heavy impact. I do not know when this is going to happen, when the agencies are going to downgrade, okay, when the terms will be published, okay, etc, etc. But whenever it happens, okay, if it happens on Monday, then then its impact will be seen on Monday itself. If it happens on Friday, then on Friday, okay. Whenever it happens, then we know, okay, this will be the result, this will be the impact, right? The second thing is the 4291 and the 61.8% Fibonacci retracement level, that is approximately 4310 4307, okay. This is the zone. This is this will be a very heavy resistance zone. Even if the S&P 500 able to breach this the zone for any known or unknown reason, then also it will be back to the zone no matter what, okay. This is confirmed. Now the third okay, this thing is that recently the non-farm payroll data was published, okay. generally without this, the news of that the US has saved itself from this the debt default. Okay, the debt default, without this the news, in case of the, or if this news would have not been there, in that case on Friday itself we would have seen, okay, a very heavy fall, because the non-farm payroll data, it came better than expected, much better than expected. What it means, that there are still jobs available, jobs are still available in the okay, in the economy, in the US, and this will counter the unemployment rate in a manner that, because there are jobs available more than, means the demand and the supply is less and the demand is high. Okay, this means that people are going to get the jobs, people are getting the jobs. Okay, and this means that people are getting the money. Because people are getting the money, this means that they are spending the money, and when they are spending the money, the producers who are producing the products, okay, or who are providing these the services, they are going to charge, okay, even the same, okay, or more from these the customers, and customers, they have the money, they are paying. This means that the inflation will remain at the elevated levels, and this is the same thing that we have seen through the recent comments of the Federal Reserve Chairman and the FOMC. Okay, and that is why the Federal Reserve has confirmed a recession, even though, you know, some or most of these the market movers, okay, because of their own, okay, this the agenda, okay, they are not accepting this thing, but the Federal Reserve, they know and they are seeing the future, and they have confirmed that there will be a recession. Okay, means there will be a recession, right? Other than that, recently the European Central Bank chief has confirmed that yes, the inflation is sticky and inflation is going to hold for some good time. Secondly, the global stock markets, the global financial markets or the stock market are trading at the peak, okay, or at these the extremely high, these the volatile levels. Okay, and this is not good, because anytime these the stock market, the global stock market can give up. Okay, so these the policymakers, they are seeing the futures, okay, and through the data that they have, okay, and through their analysis, okay, and because they are the policymakers, they, okay, they make the policies, and once they have confirmed that the recession will be there, this means the recession will be there. The second thing is that if they have confirmed that the stock markets or these the global stock markets are trading at the all time, okay, not all time, but at these the peaks or at these the high or at these the dangerous, okay, these the levels, this means that yes, the stock markets, these the indices are trading, okay, at these the levels from where they can give up anytime. Okay, and then there will be a very heavy fall, right? So NFP data, inflation, okay, these things. The fourth and the last thing is that in the next week, okay, next week, that will be the week of June 12th. Okay, in the week of June 12th, I guess 13th or 14th, okay, the CPI data will be published, the inflation data. Last month, what we have seen, that the inflation is holding. Okay, finally, so inflation, okay, it was giving up heavily, but finally last month, okay, it came into this the holding position. Okay, and if there comes a surprise, okay, reversal, bullish reversal, technically a bullish reversal is due in the inflation, but if that comes, okay, in that case a fall. Okay, other than that, just after one day, okay, after this the one day, okay, once the CPI data is published, then the FOMC, the scheduled FOMC meeting, Federal Open Market Committee meeting, okay, this will be there, and on that day, 14th or 15th, okay, the Federal Reserve Chairman will he is going to hold, okay, this the press conference. Okay, now this means that if there comes a hold or a bullish reversal in the inflation, and if the Federal Reserve, if they raise the interest rate just one more time, then again a very heavy fall. Okay, whatever you have seen, it will be back to these the levels, okay, even below this the 4,000 levels. Okay, we have, so 3972 is still due. Okay, what was 3972? 3972 was the level from where the S&P 500 was manipulated. Okay, and now because the S&P 500 has failed and has not yet retested the 3972, this means a fall up to 3972 will be there. Okay, no matter what. So now I hope these things are clear, right? Now let's discuss the probable movement. Now let's see what the what is going to happen technically, okay, in the S&P 500 in the coming week. Okay, but before I do that, okay, let's take a look into this, the Dow Jones. This is the Dow Jones. Okay, So when we look into this, the Dow Jones, what you are going to notice that the closing of the Dow Jones, okay, was as a bullish candle. Other than that, the Dow Jones was able to hold and survive above. Okay, this the bottom line, okay, or this the bearish band of the Ichimoku cloud. Okay, there was a bullish reversal. However, what you cannot see is that 33,787. Okay, 33,787 is the heavy resistance for the Dow Jones, right? And 33,787 you can consider, or you can think of it like 4291, equivalent to the 4291 in the S&P 500 for now, but it is not exactly, okay, just like the 4291. 4291 is different, okay, that is the golden resistance, okay, but in this case 33,787, okay, that is there in the picture. So because the Dow Jones failed to close above the 33,787, okay, on last Friday, this means that it is going to impact, or its upward movement or its bullish movement is going to be seen, okay, like impacting this the S&P 500 in the coming week. This means that if the Dow Jones fails to close above 33,787, okay, on Monday, okay, or on Tuesday in the coming days, in that case, okay, a fall can be expected. In that case, it will not allow the S&P 500 to move up. But if the Dow Jones is able to sustain, and if it is able to hold, or if it is able to close above 33,787, then it can give a support, okay, support in terms of the bullish support to the S&P 500. Now in terms of this, the technical movement, because the S&P 500 has closed around its high, okay, that was 4291 was also, okay, there's the golden resistance. This means that on Monday we are expecting, okay, irrespective of any movement, an upward movement. If there comes a flat open or a gap up open of any kind, in that case that condition or that obligation is fulfilled. And if there comes even a gap down open, okay, in that case it can what it can do, that it can retest the 4265. But irrespective of this, the testing or retesting, it is expected to move back up or around 4282 in order to fulfill its technical obligation. Now this is where the show begins. If the S&P 500 again struggles around 4291 and struggles to breach the 4291, in that case it will remain below 4291, it will come back to 4265, okay, and then it will find support at 4265. A breach of 4265 means it will be back to 4227 or 4237. But because there were bullish sentiments last Friday, this means that as of now on Monday we can expect a fall up to 4265, okay, because it will try to remain bullish, it will try to sustain bullish, okay. So that is why a fall up to 4265, okay. But if there comes a heavy fall, then the 4227 and 4237 will be able to handle that fall, right? So this condition will be seen if it struggles around 4291, right? Now if it is able to breach the 4291 on Monday, okay, in that case it will try to move towards 4310. But because it is already trading at these oversaturated and overstressed technicals on the lower level charts, this means that on Monday the movement will be either limited to 4291 or at max to 4310. This can, or if there comes a gap up open, immediately upon gap up open, if it moves up towards 4310, then that can be considered as the, or that can be seen as a profit booking, okay, profit booking. So what is profit booking? That what happens is that there's the bullish movement, okay, even if there comes a fall, a bullish movement, and the market movers, the market manipulators, okay, they keep the stock market or the index bullish no matter what, okay. They simply ignore, okay, these are news, the data, they defy the news and the data, okay, and these things, and they just, okay, keep it bullish. Then on one day what they do is that they give this the bullish open, okay, or a gap up open, generally a flat open or a gap up open. Immediately upon open, they push the index or the stock market or a stock, okay, in this the bullish direction. And then, okay, then these the retail traders, they follow these the market movers, the market manipulators, okay. and then after keeping the particular stock or an index, okay, or the stock market around these the levels, okay, after some time, 15 minutes, 1 hour or so, okay, 2 hours, 1 hour or so, generally it happens, okay, in the first 1 to 2 hours, okay. So by keeping it, okay, around here, then they immediately they dump, okay, and then we see, okay, a fall, a heavy fall, right? That is what we call as the profit booking, okay. So in this case, whether the profit booking will happen or not, okay, so that will be seen only on Monday. But the very first condition will be there must come a flat open or a gap up open, okay, and immediately after flat open or a gap up open, it must move up, okay. And when it moves up, then we need to look into, okay, a very short term charts, means the 15 minutes, not below 15 minutes, 15 minutes, and then 1 hour chart to see whether the conditions, whether the technical conditions are there for the profit booking or not, okay. And if you are my Patreon community member, okay, then I will give you the update, okay, this is the first update, and I will tell you that whether the profit booking is going to happen or not. But yes, it's clear that on Monday, technically S&P 500, because in the absence of any news, good, bad, okay, or this thing, and because it is trading at these the oversaturated, overstressed technicals on the lower level chart, this means that on Monday, maximum up to 4291 or 4310 on Monday, that's it, okay. A little bit up to 0.4, 0.5 points, okay, that's fine, but up, down, okay, but a maximum this thing. Now, if the S&P 500 is able to hold, if there comes no profit booking, if the S&P 500 is able to hold, okay, around this the 4291 or above this the 4265, then again on Tuesday it can try to move up, again the same condition. But if the S&P 500 holds on Monday, Tuesday at least, okay, 2 days around these levels from 4265 or 4291 or this the 4310, okay, around these levels, if the S&P 500 is able to hold around these levels on Monday and Tuesday, okay, then on Wednesday the technicals, then by Wednesday the technicals will cool down, okay, a lot. And in that case, what will happen? In that case only the S&P 500 can try to move up. Move up means it can try to breach the 4310. However, there is a condition. If the S&P 500 fails to close above 4291 on 2 consecutive days, at least a minimum, generally, okay, on this level we need 3, okay. But if the S&P 500 fails to close, see, an intraday breach, I'm not talking about intraday breach, that can happen. I'm talking about the close. If the S&P 500 fails to close above 4291 on 2 consecutive days, then it will remain below 4291. It can even come down to 4227 or even come down to 4185. Okay, that can happen. Even though it looks bullish, technically it is 100% bullish, but this is the role of 4291 and 4310 to keep it here. S&P 500 is not allowed to go beyond 4291 until and unless it comes down and it retests to some levels, like in this case this will be 4155, okay, 4155 or 4155 or 4185 in this case, okay, 4155 or 4185, until and unless the S&P 500 retests these levels and sustains above these levels, okay, S&P 500 is not above, it is not allowed, it is not allowed to move, okay, to the other side of the 4291 and 4310 and to go bullish, right? As of now, even if there comes a breach, then again it will come back down. It will be coming down to retest the 4291, not just to retest the 4291, but to come down below 4291 and to retest these the levels. This is how it works. So 4291 and 4310, okay, very heavy resistance as of now within a single candle, okay, or in one go. It is not allowed because historically it was, or it has never, okay, we have never seen this thing happening. This means as of now it must give a reversal, and when it gives a reversal, then it must sustain above 4155 or 4185, and then it must move up and to retest the 4291 and to breach and to sustain. This is how it works, and this is technically okay, how it is allowed, right? Now there is one more thing that I mentioned, okay, a few times earlier, recently, that just before a recession, not a correction but a recession, okay, historically we have seen that just before a recession, okay, there comes an illogical movement, this illogical movement defies all of the technicals, the news, the data, whatever is going to happen, it simply defies all of everything. And the market manipulators, okay, who are responsible, okay, for giving this the illogical movement, illogical bullish movement I'm talking about, okay, illogical bullish movement, they just keep it bullish, bullish and bullish, okay, and then comes one day when it changes this side, okay, or it simply, you know, turns into this the bearish side, and then from there, that day onwards, bearish, bearish, bearish and bearish for many months, okay. This time also this will be seen as an illogical movement, or this is an illogical movement, because recently we have seen that the Dow Jones and the SP 500, we have seen a very sharp change in the MACD, which generally, okay, generally means under normal circumstances, okay, we do not see, you know, such a sharp change in the MACD, but recently we have seen a sharp change in the MACD on the daily as well as on the weekly chart, okay. So that was an indication that yes, an illogical movement is there and this can happen, right? So on Monday and Tuesday, it is clear that if it closes below 4291 on Monday and Tuesday, then no, it's not good, okay. Intraday it can breach, not a problem, but closing is important. Or on Monday and Tuesday it moves up and hits 4310, means as soon as it hits 4310, it has fulfilled its obligation of this 61.8% Fibonacci retracement level, and now it's done. The bullish side, okay, it is done. Yes, it can hold, it can try to hold, it can try to sustain around these levels, because next week there is no news, no news or no this the important data, okay, that is going to be published this the next week. This means that the S&P 500 can easily hold. If it wants to hold, it can easily hold, okay, or it can remain around 4291 or 4310, because this is the last thing, or this is the last time we are seeing S&P 500 around these the levels, because on 13th June 13th or 14th, okay, the CPI data will be published, and just one day after that the Feds will the FOMC is there, and the decision will be made, okay, whether to increase the interest rates or not, because after the better than expected non-farm payroll data, now the probability has increased to 70% that the Feds are going to raise the interest rates, because first it was the CPI that has confirmed that the inflation is holding, then it was the PPI, further than that that has confirmed, and the PCE, okay, that has further confirmed that the inflation is holding, okay. Now the NFP has confirmed that the inflation is holding, so the probability has increased to 70% that the Feds are going to raise the interest rate just one more time, okay. So June 14th, 13th, 14th, okay, I will confirm, okay, that the next week, okay, when and if there comes a bullish reversal in the CPI and the Feds raise the interest rates, then this is the last time we are seeing the S&P 500, okay, around these levels, and then by next year in the fourth quarter of the 2024, okay, we will see fourth quarter or the first quarter of 2025, we will see the S&P 500 around these levels, okay, because then there will be a recession, and during the recession it will come down, and then it will see, okay, a reversal, so that will take like 1 year or more than 1 year, right? So as of now, this is the thing, 4291 4310 downward side, okay, in the bearish side. If it comes down, 4265 is going to hold, then 4227 4237 is going to hold. A reversal from these levels can be seen, yes, okay, but again this the retest, but the actual retesting, okay, will be seen once it comes down to 4155 or 4185, okay. It must come down to 4155 or 4185, and then it should take a reversal. Once there comes that reversal, okay, then only, okay, after a little struggle, okay, it can breach and it can move above 4291. Now some of you want to ask this question, what if there comes back-to-back bullish candles? Fine, if there comes back-to-back bullish candles, or Monday bullish candle, Tuesday bullish candle, okay, this means that the S&P 500 is trading at saturated levels, overstretched technicals on the lower level as well as on the daily chart. This means that you are seeing, okay, back-to-back bullish level, then either on Monday or Tuesday or Wednesday, the market manipulators will go for the profit booking, okay, because by that time everyone, so as of now they have convinced everyone that it is going bullish, okay, people are going bullish, right? By the time, okay, they think, okay, now they have accumulated the volume. See, this is the bullish movement, this is the heavy, this is the bullish movement, okay, beyond all technicals and everything. The purpose of this bullish movement is to accumulate the volume so that when there comes the time, okay, then they can sell heavily. Now guys, there is one more thing that I mentioned 1 or 2 times here, but I mentioned this thing, okay, almost every other day to my Patreon community members, that you should collect shorts, 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 okay, or the put options, on these the bullish reversal, okay, or this the bullish movement. Whenever you see that the S&P 500 is going bullish, okay, because it is already trading around, okay, its expected high, okay, this means that you should collect shorts or the put options. Means you can use a differential method. For example, you have invested 25% capital here, okay, and then 25% here, 25% here, okay, like this. Shorts means if you want to trade, okay, in the or if you want to short the S&P 500, then you can go for the futures of the S&P 500 or the futures of the Dow Jones, because as such you cannot short the S&P 500 or the Dow Jones, because we are talking about the index, right, or Nasdaq. So if you want to short the Nasdaq, in that case you can short the futures of the Nasdaq or the ETF of the Nasdaq, that is the QQQ. Or if you want to short the S&P 500, then you can short the futures of the S&P 500 or the ETF of the S&P 500, that is SPY. Similarly, in case of the Dow Jones, you can short the futures of the Dow Jones, or you can short the ETF of the Dow Jones, that is DIA. So you should collect shorts here. Now put options. Now in terms of the put options, you know that there are these the options, okay, options of these the indices, okay, and then there are ETFs like QQQ or SPY or DIA, okay. So you can opt for these the put options, or SPX itself, right? So you can collect the put options, for example 25% here, okay, or here. So this means that once you are done, and guys, one more thing, this activity I am recommending this, the collect shorts and the put options, only and only if you are doing this for at least for 1 year of expiry. For example, if you are collecting the put options, then your expiry must be March 2024, okay, or April 2024, right? Or means you must have this the longer expiry. Why this the longer expiry? Because as of now the Federal Reserve has confirmed that there will be a recession, a confirmed recession, okay. So recession is confirmed. Now when exactly the this is the S&P 500 and the entire stock market is going or will be entering into the recession, okay, that particular date is not known. That is why, okay, we might see, okay, a little bit up and downs, okay. This means that there will be some fluctuation. In order to curb the fluctuation, okay, or to save, okay, there's the value of the put options, because theta will be applicable, theta will be eating the value, okay, every day, and these the fluctuation. That is why I'm recommending, okay, a 1 year expiry, right? So when you do that, and let's say you are doing this, okay, for some okay, and let's say you are doing this for some time, and now your average is 4265, okay, and we see, okay, and in the next week, okay, or next few weeks, we see that the S&P 500, it moved a maximum up to 4300, 4310 or so, okay. In that case, what will happen? Then there will be a recession, okay, a very heavy fall, and your average price will be 4265. Then you will see that 10%, 20%, 30%. So whenever the recession comes, then we see, okay, 40 to 50%, okay, this is the bearish movement, downward movement, okay. So in that case, you will make a lot of money, and recession is the best time to make tons of money in very short period of time, right? So that is the thing. Now for those who are trading, okay, intraday, or who are trading like this, the short term, in that case you are not recommended to follow this strategy. Do not follow this strategy if you are trading in the like intraday or short term. Short term means for 2 days or for a week. In that case, no. In that case, you should follow the swings, or you should follow the daily movement. And if you are my Patreon community member, okay, then you can follow the advice, okay, that I give every day, okay, and accordingly you can trade intraday, okay, or like for this the very, very short term. But if you have patience, and if you want to make a lot of money, and if you want to play safe, in that case, collect shorts and put options, and make sure your expiry is 1 year minimum, okay, 1 year, March 2024 or April 2024, okay, or maybe like May 2024, that will be acceptable, right? So guys, if you want to join my Patreon community, then I have given the link in the description of the video and also in the comment section. And guys, other than that, if you want to participate in this, the S&P 500 knowledge transfer program to learn the movement, strategies, trend, analysis, manipulation, technicals, predictions, levels, and much more, then I have given the link in the description of the video and also in the comment section. And if you do not want to take any risk, if you want to play safe in the stock market, if you want to make 30% returns in 1 year, then I have given the link in the description of the video and also in the comment section. And other than that, these are the terms and conditions of this program, and these are the recent trades, okay, that I've given to my the members who have participated in the trade setup program. So guys, if you have not yet subscribed to my channel, then please subscribe to my channel and hit the bell icon. And if you have liked this video, then hit like. If you have any questions that you want to ask, then please feel free to ask your question through the comment section. So guys, this was my S&P 500 technical analysis for the week of June 5th, 2023. That is from June 5th, which is Monday, through June 9th, that will be Friday.